Hello traders, Gary Wagner here at just about 11:30 in Honolulu, 5:30 in New York. It is Monday, July 27th, 2020, and this is the Daily Report for Gold and Silver. This is truly another historical day in terms of gold pricing. To think that gold on the 7th of this month had just broken and closed above 1800, and today we are not looking at $1,900 gold, but rather 1947, that basis the most active October contract. On today's show, we will discuss our current trade. We did send out a trade alert yesterday, and we will look at our targets, which are based upon Elliott Wave and Fibonacci extensions. But before we do that, let's take a look at current pricing. Traders, we are looking at gold trading at the highest price on record when paired against the US dollar. We are looking at the continuous contract of futures, which is still going off the August contract. It is really spot, and it's currently at 1933.40, up $35.90. When we look at spot is actually above the August contract at 1939, up $38 and change. Of course, the most active contract is going to be, and really is in terms of volume right now, the October contract, which is trading at 1945.30, up $35.20, after reaching a high in trading today of $1,954.60. But gold was certainly outshined once again by silver, which gained almost 8% in trading. That is correct, 7.66 to be exact, currently at $24.60, and this is basis the most active September contract. In terms of the other markets that we are actively trading right now, we are long SLV. SLV, of course, is an ETF. That's the iShares Silver Trust. That gained about $1.62 per share, $22.83. GLD gained almost 2%, and that's at $182.21. And lastly, Nugget gained almost 10 full percent, 9.55 at $110.59 per share. Traders, let's take a look at our technical studies. As you know, we did send out a special trade alert yesterday. It was about 2 o'clock in Hawaii, about 8 o'clock in New York. So all traders on the mainland should have been able to have acted upon it, in which we recommended the initiation of long positions in the October contract. Traders taking that call got in roughly at 1924, and we put our stop initially at 1880. On the next chart that we look at, I'll talk about our upside projections, but for right now, my recommendation is to maintain your current long position. You do have October gold trading at 1947. It is putting it up $30+ on the day. Maintain your current stop, although we will look to take this stop and tighten it just below $1,900 at some point this week. Traders, while it is an extremely exciting time to be involved in gold, gold is certainly raging. It is at an all-time record high. As a market technician, and even looking at it strictly from the fundamental basis, it becomes difficult to do any kind of a technical study that's really going to forecast where gold could trade. Typically, as a market technician, we are looking at past historical data and seeing how the market reacted when it was at a certain price point. That is not the case here. We have no history in which we can go with. In other words, we are in uncharted territory. The only technique that makes sense and seems to draw some valid results for us is to do a Fibonacci extension. And so to do that, we have to incorporate Elliott wave theory. And this is the same technique that we have been looking at prior to the move to this level. In essence, we are looking at this long rally here as a wave 3 rally. We're then looking at our correction taking us down to about 1680 here, and then projecting our extension from here. One thing we have to realize is this market has been, in essence, moving in a parabolic manner ever since it broke above $1,800 per ounce. So we want to be extremely careful about that, because typically when a market moves up in a parabolic manner, it has a pretty strong and dramatic correction once the market does begin to move to the other side. That being said, we have already breached the 0.618%, and when we look at the straight Elliott wave rules, they simply state that wave 3, which is this wave here, cannot be the shortest of any of the impulse waves. So what I'm plotting is the 0.78%. That takes us to 1992. And of course, if we go to the 1-to-1, that would take us to 2082. So 2050, 2045 would still fall within the defined rules of Elliott wave, and that Fibonacci extension could take this market easily well beyond $2,000 per ounce. We will be monitoring the market closely. Traders, maintain your current long position in gold. For those who are trading silver, maintain your current long position in silver. For all of our traders who have rebalanced their portfolios by the addition of SLV, Nugget, NUGT, and GLD, maintain those as a long-term investment vehicle. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.